You're watching WLOX News This Week. Here's David Elliott.
And thanks so much for staying with us, everybody. Interest rates rising. The Federal Reserve keeps bumping up rates to try to get inflation down. Joining us to talk about all this and more, financial advisor Mike Strojny. Mike, good to see you, and thanks for being with us on the show. I appreciate it. Okay, on Wednesday this week, Jerome Powell and the Fed, another 0.25%. Are you going to your phone to get the very latest?
No, that's not my phone. It's my notes.
Okay.
Just in case.
So we go another interest rate hike. We can feel it rippling through the financial sectors, particularly banks. What are your thoughts of where we are?
Right. I think the interest rate thing is really overdone. This is one of the first times the Fed has done exactly what they said they would do. In previous discussion, I think they did raise too fast, that they're getting...
Well, I've done it 8 times now.
Yes, but very fast.
2022.
Right, but they're down to 0.25%, and if they do what they said they would do, which they have done so far, we're only due for one more 0.25%.
Okay, so we have Signature Bank, we have the Silicon Valley Bank, both going down in flames. The government, essentially the Fed, bailing them out. What do you think the feelings are in the banking sector?
I think that if you look at the banks, their stocks are way down, and they're considered value investing. Some of these banks now, their dividends have shot up because they are actually way down, and their price to earnings ratio are 5, 6, 7, and that's they've never been that low. They should be up there, at least in the teens. So I think the banks are probably pretty good investments, especially when the Treasury Secretary is reassuring the public that depositors are safe. And I think that's the most important thing. Depositors are safe.
But there is panic. There is fear.
Yes.
There is uncertainty. And maybe the media can be to blame a little bit for that. I don't know. I think so. But will there be a run on the banks? Or is my money safe? The regional banks, the small community banks. What do you say to people who are worrying about their status?
I think that they're all, the last act they had where they have to pass these stress tests, banks are in good shape. They are passing their stress test. The 2 banks you mentioned, that's individual malfeasance, those people should be prosecuted that ran the banks.
But instead they got bailed out.
I understand that, but there should be, I think, rules and regulations that the individuals that were running those banks should be in trouble.
Well, I agree with you on
not
that.
the depositors, but
of course not. But I agree with you 100%. There was malfeasance. They were asleep at the wheel.
Of course they were.
Yeah, living large.
They were living large.
Yeah,
that's worse than being asleep at the wheel. That means they were at the wheel. They were just driving the wrong way.
There's somebody else driving the car for them.
Yeah, that's cool.
So inflation. This whole attack by the Fed with these interest rates is designed to try to slow people. It all seems backwards to people. Why do you want to slow down the economy? How does all of that work into inflation and everything else?
Well, I think that they worried because they let inflation get ahead of them. And there was a wise news anchor, yourself, that actually said, yes, they realized they made a mistake. In fact, Powell even said that they should have read the tea leaves differently and smarted with a smaller increase to the interest rate.
Yeah, I said that to you before the show.
Yes,
yeah, well, maybe they should have started in about 2014, gradually raising rates.
That's correct. We need an interest rate, because if not, what is really happening to the American people is a sort of a shaft job, because right now the American people, if you want to go to a 0% interest rate, eventually the taxpayer is going to pay that. Nobody really has a 0% interest rate, and that was only, they were just trying to keep the economy alive. So
okay, so a lot of people, they debate and they blame when it comes to how did we get here with this record inflation. To me, it's simple. Undisciplined spending by the government. The national debt is now over $31 trillion. So, isn't that what you blame inflation on?
It's exactly. That is it. It's not only the fact that they are passing $1.5 trillion bills like they were candy. They're passing $1.5 trillion bills easily, And like they don't care, any explanation is going to where eventually are we going to get the money from to pay these bills back.
So
and
people,
that is not good.
So people, you know, they look at their 401k. Some people look every day and get very nervous. Other people say, okay, it's not a sprint, it's a marathon, I'll just relax. Some people are looking at CD rates, interest yields on things like money markets, not very high. So what are people scrambling and trying to figure out what they should do with their money?
They are because we've always had a backstop. Generally speaking, a diversified portfolio where, say, you're 60% stocks and 40% bonds or whatever. The bonds would always, if the stocks were retracting, bonds would either be staying the same or increasing. What happened when the interest rate increase caused it, bond fells dropped like a rock and the stocks fell. So the growth stocks get blamed for what more than what they caused, because people were not understanding that the bonds were not a safe haven. Because
I know you guys don't like to give out advice on television, but, and I'm not asking you to give out advice, but some people went to the sidelines and just went all cash. Other people looked for, okay, I'll take 3%, 4% return, whether it's a CD or something else. What are you kind of telling people generally right now?
Well, I mean, the thing about it is you can never absolutely predict, or else everybody could predict exactly accurate. We would have in the January of 2022, we would have gone to all cash because and let the chips fall where they may. But the thing about it is you will never be able to predict in advance.
All right.
You have to go for the long run, and so you may shift to more value kind of stocks. Like I mentioned, the banks, the companies that are paying high dividends, and those companies are going to be here, and they're going to be here 20 years from now.
Okay. Mike Strojny, I always appreciate it, Mike.
All right.
Thanks for coming in and helping us out today.
Well, I'm happy.
Well, the battle over whether to expand Medicaid in Mississippi. We'll talk about what's at the heart of this issue next.